or pre-selling before the news, we have to throw out the possible buy on rumor, sell on news type of market psychology. And because of that, even if we get a inline with expectation, we will just have to wait and see how the market reacts. I wouldn't be selling exactly at the release of an inline with expectation release, because right now we're really not expecting, or how should I say, or the traders, that the reason because we would be taking a sell is because traders would be taking profit with a as expected release. However, if we already see the market retrace down to this level, there's most people that were going to take profit probably already have taken profit. So we probably won't see that kind of reaction. So it is important to know that today we got a 56.6, and we were expecting a 57, so we'll have a 0.4 worse than expected. So basically we're not seeing much of a market reaction. As we can see here, market barely moved about 3 pips or so. So I guess we have another release that came out before the schedule. So at this time we are going to skip the trade because really we're not seeing any kind of market reaction here. Okay, let me just double check and read the numbers here. The release is 56.6 versus 57. It was released at 428. So it was released actually on time, I guess. Well, I always expect this one to come out at 4:30, but I guess if they changed the time on recently, then I guess you guys are right. Okay, all right. Basically, all right, that's good to know. I haven't really been trading this news release. As I explained earlier today, is that I'm recently looking at this release more than before, but I'm recently started looking at this release more than before, and I'm not really seeing much of a market reaction, but I want to start trading it a little bit more. So it did come out a little bit worse than expected. We're seeing market retracing a little bit more. On the pound dollar, we saw roughly right now about 14-15 pips of retracement. The pound dollar is really showing some weakness. But then again, the release is didn't really hit our trigger, and the market moved about 18 pips or so. I really don't want to go against the trend too much. So what I would rather be doing is to go long on the pound dollar if the market retraces down to the low of the day at 166.27 or so. Alright, or in the event of a pound yen, I'll just go ahead and do a quick fib line. In the event of a pound yen, if the market retraces down, let's say to the 145, based on my daily limit levels, the trend line, and a whole bunch of other technical, and the retracement, if the market goes down to maybe to the 145.70 area, I will be about not 50 pips down. I'll be looking to go long on it. I'm looking for the market to drop down to those levels. I'll explain why. The pound dollar, I'm looking to see if it will drop down to the low end of the range today. If it goes down close to the low end of the range, around the 30s, that will give me a chance to jump in on a trade. I'm going to give it 40 pips of stop loss, given the fact that 16600 could be a support level, given the fact that it is a whole number. And so I'm looking to put the stop around 165.90, and hopefully it will bounce back and then we'll see 16700 again. So that's one scenario. The second scenario is the pound yen, and I'm expecting the pound yen to hopefully drop down to the third line of my daily limit levels. Also corresponds to the area between the 61.8 and 78.6 retracement. Given the fact that we're seeing some weakness in the Japanese yen, if the market drops down to this area, there's a probability that we'll see a reversal, and that will provide an entry for us to go in on this area, and hopefully it will reverse back up and at least give us 50 pips of possible profit. So those will be the safer entry areas per se. So that's what I'm looking for right now at this moment, and I would really feel uncomfortable right now taking a sell trade on the pound dollar or the pound yen, because the fact that the market has been very risk appetite-ish. So taking a reverse trade wouldn't be, I guess, to our best interest. So it's better to stay out of the market or wait for the market to drop down, as we can pretty much get a better entry then. So that's the plan right now, and hopefully this news release will provide the push that we need for the market to drop down and to give us an entry. The overall trend is still up for the pound dollar and the pound yen, and the Japanese yen is the dollar yen is showing a little bit of reversal. I think it's just a little bit of consolidation, and hopefully we'll get either one. Okay, so that's the plan right now. I'm going to set the alarms up, and if we get the market retracement down to those areas, I'll be the first one back here and let you guys know that there's an entry. If not, then the next time, the next trade is going to be the 7:45 ECB rate decision, and I'll be back. We'll look at that. The idea today is to be careful and not to jump into too many trades. Steerman, to answer your question, are we going to be taking a full position or we're going to take a half a position? I think we can take a full position from this trade, based on we're not really doing that reaction type of news trading today. This will be kind of with a little bit of longer term fundamental involved, and also by just looking at simple Fibonacci retracement and just looking at the market conditions. So yeah, we should do a full position here. So that's the plan now, and let's see, maybe the pound dollar will be the first one to give us a possible entry. So stand by. As you can see, the pound dollar has already breached the 78.6% level, and I think that should give us a good entry. But I want to use the support here at the 30. That will definitely give us a better risk to reward ratio. So stand by now. we're seeing, just based on what we covered today on the correlation, I'm seeing that the euro dollar is basically able to hold on around 151.12 area. Not seeing any more of dropping on the euro dollar. And the pound dollar basically made a complete retracement down to the 78 point, below the 78.6 retracement. So, and if we're talking about risk to reward ratio, this is the area where we think that the we have a great risk to reward ratio for the market to reverse here. So by taking a little bit of risk, having our stop loss close, a tight stop loss, what I will do is I'll be really looking at the at this level, at the 166.30 area. If we really breach this level and start to shoot downward, what I'll do is I will probably just go ahead and close the trade. So that's what my plan is. So we are really giving it about 15 to 20 pips of stop loss, looking at the way that the market is going. But for the purpose of our trade, I'm issuing a 40 pip stop loss. But I have plans to close it sooner if we breach this area. Let you guys know. And if the market is likely to reverse, we could see it goes back above the 80 level, 166.80, or at least 166.60 or 70 level. That will be the pre-news release level. So if we see the market goes back to those areas, it will be good. And I'm just looking at the euro dollar. The euro just went up about 6-7 pips, and the pound dollar hasn't really made that move. So again, correlation that was covered early on today. Okay, we could see the pound dollar eventually catching up on that movement. So I think it's all pointing for a possible reversal here, and that's what I'm going to be looking for on this trade. So in the meantime, just stand by. Let's give it some time. Overall trend is on our side, and we could this might be the only area that is reasonable for us to jump in on the pound dollar trade. So stand by. Now, of course, on the if you look at the strength meter, you're seeing the pound at 2. Then you say, hey, this crazy guy Henry, why did he issue a long trade? But I have to explain. If we're looking at the lower end of the level for the pound on 4 or 5 different crosses, then that's why you will show you a weak number, but it doesn't mean that the currency is really weak. It could just show you that it's at the lower end of the range, and when we are contrarian traders, especially when this currency is at the lower end of the range, it could show that the market coming back up. Gandhi, I'm assuming the question that Gandhi is asking is how do you decide if the euro dollar will catch up with the pound dollar, or the pound dollar will catch up with the euro dollar, because of the common denominator being the US dollar. If we see the euro going up, meaning that the US dollar is likely to be weak, and euro is the deciding factor. So that's why I expect to, if the euro were to go stronger, dollar will likely to go weaker, and all the dollar pairs will move stronger than will be stronger than the US dollar. So, like I said, you look at the most liquid pair for direction, and I'm seeing the euro dollar right now is really holding on to its ground. So we'll probably see the pound dollar react now. So in the meantime, we are going to just sit back and look at this trade. Hopefully in the next hour or so we'll be able to see some profit. And Devin, you said that that the pound dollar and pound yen changed to the downside. Not really though. If you look at the daily, we really haven't seen a gain or a loss. It is still a minor gain, so I wouldn't say that it changed to the downside. If the market really break the low of the day, then probably we'll see the market change to the downside. Could the euro pull down the pound? Possible, but you're looking at the dollar as the common denominator once again. Okay, Gandhi, your question: do we trade? Do you think? Are we going to trade Euro News, Chinese TIA? I think. I'm thinking you're referring to the same question as Gandhi is asking about the ECB rate decision. Yes, we're going to be trading it. Even though I think we're probably going to be sitting here and just look at the market, nothing is likely to happen. But nevertheless, we're going to be trading it. And in the event that there is a surprise rate hike, we're jumping on a buy for the euro dollar. And Gandhi, your question: do I think the euro will trade a bit different in anticipation of Trichet's speech? Yeah, of course. I think the euro will probably be sort of range bound as we're seeing right now, but we just have to wait for after his speech for the euro to make a breakout, either upwards or downwards. It could be, but there's really isn't much of an expectation. If you really look at the long-term trend, Gandhi's asking that if the strength in the euro that we're seeing right now is based on the market sentiment. But sentiment of what? Is the sentiment expect for a rate hike? Obviously not. What is the sentiment expecting for Trichet to be, being a more hawkish in his tone? It's a little bit tough to determine. If there's something concrete about Trichet's speech that we should be expecting for, then I would agree with you. But judging from what we're seeing in the market, I don't know. I think it's sort of confused. Market traders are confused. Traders don't know what to expect about the market. So I think that would be a better explanation. Like I wouldn't know what to expect from Trichet's speech. It could be just the same old lukewarm, speech. He will give you one sentence of possible hawkish, tone, and then the next one will be like, we're still struggling. The economy is still under considerable pressure or whatever. So that's probably what we will expect, and the market doesn't really know what to make of it, I guess. But you could be right. There could be some underlying buying pressure just before the ECB rate decision, and when the rate decision comes out, we'll see a pullback. So, but usually don't see that kind of reaction with the interest rate from ECB. But we'll see. The idea is let's stay out and wait until after the speech to make a determination. Okay, guys, I'm going to sit back and look at this trade. Let's see if we can pick up 40 pips on it. All right, and we're taking a full position, I think. So stand by. Tillman, to answer your question, why do we take the pound dollar over the pound yen? Because the pound dollar gave us it retraced to the level that we're waiting for first before the pound yen. If the pound yen would have gone down to the 145.70, I would have jumped in on the pound yen. So whichever way that gives us a better entry. Exactly, better risk to reward ratio. Aussie trader, Okay, let me just you guys see what I did with the fib retracement, right? From the low end of the day to the top of the day, we did a fib retracement, and market retraced down to the 78.6, and this gives us a very good risk to reward ratio. And of course, when you do a Fibonacci retracement such as the one I did, you're always looking at the bottom. If it breaks the bottom, then you're pretty much planning to bail out on your trade. So this kind of trading really gives us a very good, very low risk, but very high reward, because the market could go all the way back up and retest the high. So it's a great risk to reward ratio from where we have entered. And the market dropped down after the news release, which is right around this our current area where we are at right now. Market dropped down, gave us a good entry, and we used the negative news to give us a better entry. And reason we didn't want to take a short trade, because the market has been very very strong on selling the US dollar, so we're not going to go against that trend. And of course, when the market reaches down to the you went to the 166.40.36, I saw that the euro dollar wasn't able to break down lower, so just based on the most liquid pair, which is the euro dollar, and I saw a correlation with other currencies, decided to jump in at this point. That's covered with today's coaching session, so if you miss it, you should be able to watch it tomorrow or whenever support gets around to it. How do I pick the top and the bottom points for the Fibonacci retracement? The daily range, starting of the day at 5 p.m. to the high of the day. This is just the daily high and low, so it's pretty straightforward, and that's why I use this indicator. From the low to the high, you can see it clearly, and from the starting of the day. Yes, I guess. I mean, we're already up about 18 pips. Guys, if you enter on a full position, we're almost up like 20 pips. Yeah, let's go ahead and be careful today, this week. So let's go ahead and take half off and move the stop loss to break even, so that there's really no more worry about this trade, and we just wait for this trade to eventually pay off at 167. So let's go ahead and do that, okay? I'm going to go ahead and issue come on, one pip. I will be taking 20 pips off on 50% position. You know what? I'm going to go ahead and take it. Alright, there we go. So move the rest to PE. Let me go ahead and issue the signal here. So those who are not in the room, close 50% and move SL to PE. And let's play some music to that. Alright, so make sure everybody is here. Okay, so now we can sit back and just see how far this trade will take us. And if you guys feel like you rather take the full position off the lot, it's okay too. Just do whatever that suits your trading style. I know that Gandhi will definitely want to wait until 16700. He's the type of trader that I think is very patient and is great. But if you want to take the short thing right now, you want to take the 20 pips, you can go ahead and do that too. So it's all up to you. So, for those that didn't get in on this trade, not a problem. As long as you understand the reasons why we got into this trade, and, so that you can do this on your own later on or in the future, that's what it's important with this trade. Okay, everybody, I'm just going to go ahead and take a little break here. I'll keep my eyes on this trade, and we will see if we'll come back, look at the market with more profit. And yes, Gandhi, I understand your concern. Absolutely. Devin, it's possible. I mean, but remember, we will be stopped out, and you will be in a position if it retraces back down there. So just think about it. I would, theoretically, it will still be a good entry, but it will be the second time he touches that area, and I don't know if the market would start to move down. So it's probably for the best not enter. Yeah, probably for the best not to enter it. Timing is important with trading, but don't worry about it. As long as you understand what's going on and you know that the reasons for our entry, you will be able to spot the same trade in the future. And it's all about spotting them. Okay, guys, I'll take a little break, and I'll be back latest around maybe 7:20 or so we can look at the ECB rate decision, which probably gonna be a big waste of time. But anyways, we need to prepare for that. Make sure you put your stop loss at BE, so if market comes down, takes you out, you don't lose anything, but you have already banked on the 50% for the first one. Alright, guys, I'll see you in just a little bit.